This free checklist will make you money. What's up everybody, it's Silver from Silver One Capital. Let's be honest, who doesn't want to make more money in the stock market? Whether you're just starting out or you've been trading for a while, we all want those consistent wins and to avoid those big, scary losses. The truth is, most new traders jump into the market without a real plan, and they end up losing money. That's why having a structured approach is absolutely key to being successful. We're going to break down a simple yet powerful trading system that can help you make smarter decisions and potentially boost your profits. But before I move on, please do me a favor by pressing the like and subscription button. By doing this, you will receive valuable information in the future, free of charge to help you in your trading journey. I'm talking about a clear set of rules and checklists to follow before, during, and even after you make a trade. So if you're ready to stop guessing and start seeing real results, this video is for you. Stick around until the end for some bonus resources to take your trading game to the next level. Alright, before we dive into the checklist, let's talk about the foundation of this entire system, the 6 golden rules. These rules are non-negotiable and they're designed to keep you on track and minimize your risk. Rule number 1, buy only at support levels. Think of support levels as the floor of a stock's price. It's where buyers tend to step in and push the price back up. Buying at these levels can increase your chances of a profitable trade. Rule number 2, sell only at mid-levels or resistance levels. Just like support levels act as a floor, resistance levels are like a ceiling. It's where selling pressure usually kicks in. Selling at or near these levels helps you lock in profits and avoid leaving money on the table. Rule number 3, aim for 10% or more profit daily. Remember, we're not trying to get rich quick here. We're aiming for consistent gains over time. Setting a realistic profit target helps you stay disciplined and avoid getting greedy. Rule number 4, sell before Federal Reserve speeches. The Fed's announcements can create a ton of volatility in the market. It's best to play it safe and sell your positions beforehand to avoid getting caught in a sudden downturn. Rule number 5, sell in the morning on Fridays. The market tends to be more volatile on Fridays, especially in the morning, as news and events from the week get digested. Selling in the morning allows you to lock in profits and avoid potential weekend risk. Rule number 6, buy only 1 to 2 hours before market close. The market often sees a surge in buying activity in the final hours of trading as investors try to get in on the action before the closing bell. Buying during this time can sometimes give you a slight edge. Now that you know the 6 golden rules, let's move on to the pre-trade checklist. This is what you do before you even think about hitting that buy button. The first step is to identify support and resistance levels. These levels will help you determine your entry and exit points. You can find these levels by looking at historical price charts and using technical analysis tools. Next, confirm that your potential trade aligns with the 6 trading rules we just discussed. Are you buying at a support level? Is your profit target at least 10%? Is it a Friday, or is the Fed about to make a speech? If the answer to any of these is no, it's time to move on to a different opportunity. Now set your profit targets. Remember, we're aiming for at least 10% profit on each trade. Use the resistance levels you identified earlier to determine realistic price targets. Finally, set your stop-loss levels. Your stop-loss order automatically sells your stock if it drops to a certain price, limiting your potential losses. Place your stop-loss just below your identified support level. Alright, so you've done your pre-trade homework, you've pulled the trigger, and you're officially in a trade. Now what? This is where your in-trade checklist comes in. Even with the perfect pre-trade setup, things can change quickly in the market. The key here is to stay informed and be ready to adapt. First and foremost, keep an eye on market news and events. Unexpected news releases, economic data, or even tweets from influential figures can significantly impact stock prices. Stay up to date with reputable financial news sources and be prepared to react accordingly. As you monitor the market, don't be afraid to adjust your profit targets or stop-loss levels as needed. If the stock is moving in your favor and you see a new resistance level forming, consider raising your profit target to lock in more gains. Conversely, if the market sentiment shifts, you might want to tighten your stop-loss to reduce potential losses. Remember, trading is all about managing risk and protecting your capital. Chapter 4, Post-Trade Checklist, Turning Lessons into Profits. The trade is done, whether you made a profit or took a loss. You might think this is the time to relax, but this is where the real learning begins, the post-trade analysis. This is where you'll turn your trades into valuable lessons that will ultimately make you a better trader. So grab your trading journal, because it's time to review your trade performance. Start by analyzing both your successes and failures. Don't just focus on the trades where you made money, take a close look at the trades that went against you. What went wrong? Did you deviate from your trading plan? Did you ignore a key signal? Next, break down the trade itself. Look at your entry and exit points. Could you have entered at a better price? Did you exit too early or too late? Were your stop loss and profit targets set appropriately? Be honest with yourself and identify areas where you could have improved. Finally, based on your analysis, refine your trading strategy as needed. Remember, trading is a continuous learning process. The more you analyze your trades and adapt your approach, the better trader you'll become. Chapter 5. Case Studies Learning from Real-World Trades. Now that we've covered the individual checklists, let's see how this all comes together with some real-life case studies. Keep in mind that these are just examples, and past performance is not indicative of future results. Let's say you were looking at a tech company, and after doing your analysis, you identified a clear support level at $50 and a resistance level at $60. You decided to buy 100 shares at $50, setting your stop loss at $48 and your profit target at $55, which is a nice 10% gain. A few days later, the stock starts to climb as expected, and you're feeling good. You keep an eye on the news and don't see any red flags. However, the stock stalls around $53, just below your profit target. What do? This is where your in-trade checklist comes in. You reevaluate the market conditions and decide to hold on to the stock for a bit longer, hoping it will break through the resistance. You even adjust your stop loss to $52 to protect your profits. And guess what? Your patience pays off. The stock breaks through the resistance and surges to $58. You decide to lock in your profits and sell your shares, walking away with a tidy profit of $800. But it's not always smooth sailing. Let's look at another example. Imagine you spotted a promising stock in the energy sector. It had a support level of $25 and resistance at $30. You bought 100 shares at $25, set your stop loss at $24, and aimed for a profit target of $30. However, shortly after you entered the trade, news broke about an unexpected oil supply glut, sending shockwaves through the energy sector. The stock tumbled, hitting your stop loss of $24 before you even had a chance to react. Chapter 6. Mastering the market discipline, consistency, and continuous improvement. So there you have it, guys. We've covered the 6 golden rules of trading, the pre-trade checklist, the in-trade checklist, the post-trade analysis, and even looked at some real-life examples. Now it's time to put this knowledge into action. Remember, mastering the stock market isn't about luck or trying to outsmart the system. It's about having a solid plan, managing your risk, and consistently making smart decisions. The decision rules and checklists we discussed today are your roadmap to success. They provide a structured framework for approaching the market and can help you avoid costly mistakes. But remember, these tools are only as effective as the trader using them. Discipline is key. Stick to your plan, even when emotions are running high. Don't chase after every hot stock tip or let fear dictate your decisions. Trust the process and let your system guide you. Consistency is equally important. The market is constantly changing, and there will be ups and downs along the way. Don't get discouraged by occasional losses. Instead, focus on making consistent, well-informed trades over the long term. I hope this video has given you a clear roadmap for navigating the stock market with confidence. Remember, knowledge is power, and the more you learn, the better equipped you'll be to make informed trading decisions. To help you further, we've compiled a list of recommended books, online communities, and trading tools in the description below. These resources will provide you with valuable insights, connect you with fellow traders, and give you access to powerful tools for analyzing the market. By following the principles and strategies outlined in this video, you'll be well on your way to achieving your financial goals. So, get out there, start practicing, and never stop learning. And if you have not done so already, please hit the like and subscribe button. And do me a favor, please share it with someone who might be struggling with the trading. Sharing is caring. Until next time, happy trading. And don't forget to download our free ebook on mastering stock trading at www.tradingmastery.com/ebook.